Real talk, real estate. Good evening, everybody. Hope everybody is in great spirits. Today, we'll be having a real discussion about property investing. I'm quite excited. I've got a guest here who's very close to me. It's quite awkward interviewing my younger brother who is a property investor. So, yeah, quite excited about that. So, I've got about 5 questions for you, and I hope you're ready. Do you want to greet the audience?
Hi everybody, I'm sure you were actually asking yourself, who is this? Guys, this is Lebu from Nongworld, actually here to be interviewed by my older brother Neo.
So, let's go. Let's get into the questions.
It's amazing how you have this voice when you're actually interviewing me, but it's okay. Let's go.
Okay, so with number one, Lebo, I mean, you're a property investor. We see you on YouTube. We see you in events. What does property investing really mean? Like, there's somebody out there who's like, I want to quit my job. I want to get into property today. There's some student out there who's like, you know
Yeah,
what? I don't even want to work.
yeah.
So, how would you define property investing?
Okay, so now let's look at property investing in its real terms, right?
Yeah.
Property investing basically means that you are actually buying a property, renting it out, or trying to actually sell it off. So now when you're looking at that particular notion, we do hear a lot of people saying that, you know what, I don't want to work in my life and
Yeah.
I just don't want to work. I just want to go straight into property investing. So now with that notion in mind, you need to really understand that what does it actually mean to buy a property? I mean, if you do have a lump sum money, a lump sum amount of money in the bank, maybe that might be a way to actually start that, you know what, I have 1 million in the bank and I actually want to buy this particular property. However, if you're starting off like most of us, whereby you don't have actually money laying around that can actually buy you a property, you need to start thinking that how do I purchase a property without using any of my money or at the bare minimum that I actually need. So now that the most lucrative one, if you do not know actually a lot of people that might give you that money, the most lucrative one is to actually go through credit. Right. So now
Yeah.
that's how we started. I mean, that's how most of the people started, that you need credit in order for you to buy a house. However, how do you get the credit if you do not have a way of actually proving that you have a stable income?
Yeah. I mean, it's quite crazy with what you're saying. I'm actually reflecting back to all the Zoom meetings that we'll be having, all the interactions we've been having. We're looking at the same concept, which is property investing. However, people are actually going in it at different angles. You find somebody who has so much money and they know that they just want to park their money in the
Yeah.
property.
Yeah.
And then you find somebody who's about to start, let's just say they started their job and they're like, I want to quit, let's just say in the next 10 years. So, how am I going to get into property investing? And then you just find somebody again. I think this is you, that entrepreneur who's quite crazy, and they're like, you know what, I'm going to make property investing work out. So, all of these dynamics or all of these different views are coming into property investing. And
I mean, it's the two far ends, right?
yeah,
Whereby there's
yeah,
someone that's actually earning 5,000 and they're thinking that you need to earn 20,000. So they're not thinking anything about property investing,
yeah,
right? Because they think that you need to have a lot of money.
yeah,
And then you have someone on the other far end whereby they're saying that I'm not going to use any of my money to actually buy a property. So now we need to find a way of how do we get this person that's saying that I don't need any money, and
yeah,
how do we get this person that's saying I need a whole lot of money?
yeah.
How do we get them into a midpoint whereby the one that says that they have 5,000, they are getting paid 5,000? How do they decrease their expenses in order for them to be able to qualify to buy a house?
Yeah.
Right? And then how do we get the one on the far end that's saying that I don't need any money? How do we get them to a point whereby they're getting a stable income and then they are actually able to apply for property using credit?
You just reminded me about affordability. There's no way whereby you can look at property and not property investing and not look at affordability.
Mm.
Goes without saying. I mean, that's a topic for another day. I know we can actually spend so many hours talking about that. So looking at number two, with your experience, what would you say was your biggest learning experience that shaped how you see property investing?
The one mistake that we actually did was to buy a property without actually having a contractor to actually come view that property with us. So now what did happen was that we got so excited that finally we got a deal, and we didn't get a contractor to actually come view the property with us, only to find out that there were problems in terms of the geyser. There was a problem in terms of leakages in that particular property. So now, with the naked eye, we couldn't actually see that. However, once we actually bought the property, that's when the tenants started complaining that, guys, there's a leakage. Guys, the geyser's not actually working well. And we now had to actually deal with that thing. It's better going into a deal knowing that you have a geyser problem, unlike going into a deal not knowing that you have a geyser problem, only to find out that, sure, the geyser doesn't actually work properly. So I think that's the one major thing that people need to do before actually buying that property. Make sure that you have an inspector to come check out the whole house and know what's wrong and what's right in that property.
I mean, I guess it goes without saying that it's one of those things whereby we speak about distress buying or we speak about investing in distressed properties. However, we're not really going in depth what does distress mean, because as much as I can say that I bought it below market value, however, the weight that distress comes in, it's massive.
Yeah,
Yeah.
yeah. It's really massive, because now when you're looking at a property and looking at a distressed property, you're not just spending 1,000. At the bare minimum, you're spending at least 5,000 to fix something that someone doesn't actually see. So now I know sometimes it does happen that you want to fix uh, the tiling, you want to fix the paint, right? That's something that someone can actually see. So now that's a selling point. So now if someone does come into that property and see that, okay, I see that they painted, I see that they did the tiles. I mean, that's something that you can say that, you know what, my money went to good use. However, when you're looking at something like a geyser, man, nobody actually sees that. Wow, you put in a new geyser. Nobody actually sees that. So now, looking at that particular problem there, it is hard to actually spend money on something that someone doesn't actually see, because that's where most of the time you spend the most money when you're looking at property investing.
So, yeah, let's go to number three. With question number three, for beginners venturing into property investing, as you did mention, there's flip and there's rental. If you can quickly describe what flip is and then give out two pros, and then on the flip side, give out two cons for flip. And then let's go to rental.
The same.
Quickly define. Yeah, yeah,
Okay.
yeah, yeah.
So flip is basically getting a property. After getting this property below market value, you then fix it up and then resell it back into the market as soon as possible. So now with the flip game, time is your currency. The more time you spend in that particular deal, the more time you actually delay in terms of getting your money back. So now what we basically mean about that is that if I'm able to actually fix my house within 1 month, within half of the month, get to sell that property within half of that month, and then get my registration to actually be done within 1 month, that means that it took me 2 months. I mean, that's not realistic. However, I'm just giving you an example. So if I'm able to actually go out of a deal within 2 months and get 30% of my money, get my money, and then also get 30% back. So now that's the currency in property investing. Unlike having a property, taking time to actually fix it because you want everything to be exquisite, taking 6 months to actually fix it. After that 6 months, put it back into the market because you have actually spent a lot of time on that particular property. You're actually assuming that this will actually give you more money. What you then do is that you put it at in the market way above market value. Then your property takes another 6 months to actually be in the market. Already you have 1 year over there. So now then you, when you do get to sell it, it takes you 1 month to actually get it registered, and that took you 1 year and 1 month. Whereas if someone is actually in and out of the deal, that's the faster that they can actually do. So now the pros with your flip is that you get a huge amount of money back at a go, right? So now if I'm actually investing 100,000 and I'm expecting a 30% return on investment, that basically means that I'm putting in 100,000, I'm expecting to get my 100,000 back and 30,000 back. So yeah, that's the pros of it. Then the cons of it is that if you aren't actually doing it well in terms of having an attorney or having a accountant with you, it then becomes a problem that tax will actually be heavy on you. So now what we mean by tax is that if you are actually going to be buying it below market value and then reselling it, making that 30,000, the government wants to know that, okay, from that 30,000, how much are they actually going to be getting? So now it's actually heavy based on tax. So now the government actually wants you or is encouraging people to actually hold their property because you would be helping them in terms of the housing problem that people might be actually having because you're actually renting out the property. Okay, so now when you're looking at rental, rental is more of a steady way of actually growing your wealth, right? So now when I know that I've actually bought this particular property and now my money,
cash flow positive. They're like not all rental.
yeah,
Yeah.
I like the point that you just raised there. So, not all rental incomes would be a way of actually growing your wealth,
Yeah.
right? Rentals that have positive cash flow, that's a way of actually growing your wealth. So now what we're basically saying is that if I need to actually invest 100,000 into this particular property and want the same 30% in terms of my return on investment, I'm going to be getting 30,000. However, in a year, because now that will be actually divided between the 12 months. So now if you really want to know how much you're going to be getting a month, you're going to basically say that the 30,000 divided by 12 months, and then you'll understand how much you actually will be getting on a monthly basis. The positives on that is that it's less tax, it's really tax efficient, number one. Number two is that you are going to be getting cash flow until you actually sell that property. So now if you are
Or
planning,
if the tenant leaves, we've
or
had that case. You
exactly,
can never forget that.
exactly. However, if you have actually bought the property in the right location, it won't
Yeah.
be hard for you to actually get
Yeah.
a particular tenant, which is why we're saying that the only time you won't be getting any more cash flow is if you do actually decide to sell that particular property. So now Neo likes to say cash flow doesn't retire. I think that's really relevant to this. So now the con of it is that if you really need a lot of money right now, that becomes then a problem that, okay, since I need a lot of money right now, how do I then go about raising those funds? I mean, there are actually creative ways of raising funds, such as refinancing a particular property. However, if I do refinance, am I still going to be sitting on a cash flow positive on this particular property?
I don't think it's fair that you left out that other con of getting a call from a tenant. Because with Flip, you know that there's no calls that you're getting from tenants. You know everything is running. However, with rental, when a tenant calls, you know that it's bad. Like,
However, I like the point that you're actually raising there. So now this brings about how are you actually operating your
yeah,
business? Are you
yeah,
actually
yeah.
separating your business from yourself, or are you one thing with the business? So now, if you are actually saying that you're getting calls from the tenant,
Yeah.
we can already tell that you don't have a management company in place to actually handle those things.
Yeah, but
However, if the tenant does actually call the rental guys and tell them that, guys, the geyser bursts, you're definitely going to get a call from the rental guys telling you that, guys, there's something wrong with the geyser.
well, I'm looking at a perspective from it's an expense. Even if the management company calls me, there's money that needs to go out of my pocket. I don't want to get a call from a management company or a tenant. It's fine.
I think that's a big con because already when you see their numbers
Yeah.
go off on your phone, you can already tell that not again. Because when it does happen that you do get the money, they don't call you. It's
Yeah.
just an
Yeah.
SMS that reflects that you just got money. However, when they do call you, they're not calling you to check up on you. Come on, man. Let's keep it real.
It's a relationship based on transactions.
Exactly. Exactly.
Okay. Looking at number 4 then. I mean, we've heard people talking about no money down deals and all of that. But now they don't necessarily talk about the bad side of it. What would you say is one of the negative or one of the risks? Let's just say, what risks come with agreement sales or no money down deals?
Okay. So now when you're looking at an installment sale agreement, right? This is basically you getting a property, renting it out, and then signing a contract that you are actually going to be paying this person's bond, and you are actually going to be given some sort of profit every month, right? That's an installment sale agreement. So now, if you are actually promising this person that you are actually going to be giving this person a monthly income, and you do not really have a solid plan in terms of how are you actually going to be getting people into this property to actually rent it out? Because now, most of the time with installment sale agreements, you don't really make a lot of money in terms of like I'm getting 5,000 off out of this particular property. What happens most of the time with installment sale agreement is that you are getting around 500 at best case scenario, right? So now if this person is saying that you need to give me 5,000 to actually cover all of my expenses and give me some profit, and you are only getting 500 from this particular property, it's going to take you a lot of time to actually save until you get to that 5,000, so that if the tenant is not there, you can actually cover those expenses.
Yeah.
What does the contract say?
Can I go for the TKO with this one?
Yeah,
I like sounding smarter, so I was listening, hoping that you're not going to say this point so that I
I
can
know
say
you. I know you.
it. So, you spoke something about contract. So let's actually put this into perspective for people that when we're speaking about contract, I'm saying that I'll be paying you all your expenses, including your bond. So now let's just say that your expenses are amounting to the bond, insurance, rates and taxes. They equate to 15,000, and I'm a student. So you agreed to this that okay, you can continue with the installment agreement, and then now the tenant leaves.
Hmm.
So does this mean I need to take out the 15,000 even though there's no tenant?
Okay, so now when you're looking at a particular situation whereby you own this property, right? And now you're saying that you can actually, you know that you can rent out your property at 5,000. And I'm coming in and giving you a guarantee that, you know what, I will rent out your property at 5,000 and give you that money on a monthly basis. I need to find a way of how do I actually overcharge people on that particular property. And the only way to do that, I mean, that a lot of people are actually using right now is through your Airbnbs and your through your Airbnbs,
Bookings.com.
bookings.com, and so on, right? Your short-term rentals.
Yeah.
So now if you're able to actually pick up those 200s on a daily basis, that might actually equal to more than what you have. However, the risk is, what if you don't actually hit that target of 5,000? That then becomes a problem to you,
Yeah.
that you need to actually balance that amount of money. So now those are the things that you need to be looking at, that because most definitely if Neo has a property right now and then he knows that he can actually rent it out at 5,000, and then you come through and you're like, man, I can actually rent it out for 6,000. Neo's going to try to check in the market that are there any people that are actually renting out for 6,000, and if there are people renting out for 6,000, he's definitely going to rent it out for 6,000 and cut out the middleman.
Yeah. I mean, the thing is, I've seen this, that we always looking at it from how do we gain. We're not looking at it from the owner's side. The owner's side, because it goes without saying that if the owner is going to agree to such an agreement, you need to be thinking that if the tenant does decide to leave, they still need to pay their bonds. They still need to pay the insurance. So those monthly expenses are recurring expenses. It's not one of those expenses whereby you can put a pause to it if the tenant does decide to leave.
Yeah.
I'm really happy that we have that on record and we spoke about it in depth.
I mean, what you did speak about there is really powerful. So now, when you're saying that we are thinking it from our perspective in terms of how do I make money,
Yeah.
the person that's actually living, that's going to be living in that property, also has their selfish reasons in
Yeah.
terms of why or how much are they actually trying to get
Pay.
to pay. So now, if the tenant is looking at that particular property and they know that they won't actually pay anything above 6,000, he's definitely not going to pay anything above 6,000. Even the owner,
Yeah.
when they know that I can actually rent my property for 6,000 and I'm actually short selling myself, they are definitely going to be renting it out for 5,000. So now everybody has their selfish reasons, and now it's all about how do we actually have that equilibrium that everybody's actually happy at this particular point.
100%. Before we close off, this one is one that you didn't anticipate. We heard that you are busy with the project right now, so I want to understand, flip to be specific.
Okay, I was about to ask which project.
How are you feeling about this?
Okay, at this particular point in time, I'm feeling really excited. I mean, I'm supposed to be feeling down and out because of how this flip actually came about. The tenants just left, by the way. The tenants just left and left the house vacant, no notice, nothing.
As a mess.
Nothing. So
there were 16 dogs living in that
16
house
dogs
of
living.
yours.
So That's something that we actually thinking about, that we should actually be feeling down. However, in every crisis there is an opportunity,
Yeah.
right? I remember someone like saying that things don't happen to you, they happen for you, right? So now this particular situation, it actually opened up our eyes that we can actually implement a strategy that can actually help us grow faster than we would. So now if the situation was that the tenants were still paying, we wouldn't have actually thought about the situation that we can actually do right now. So now our backs were against the wall and we needed to actually act fast. So now the project that we're actually doing right now in terms of the flipping the property, I'm really excited about that and I really can't wait to tell you guys the results. If you are actually ready for the results, please put them down on comments so that we know that this is something that you'd actually want to see.
When there's a crisis, it's very important how you react towards it. That's what I'm getting from you. Are you thinking opportunity within that crisis, or are you thinking fallback, or are you thinking let me save what I can? So it's very important as an entrepreneur to always be thinking opportunity. And that's how I'd like to wrap up today. Hope you guys did enjoy this podcast, the interview. I enjoyed interviewing Lebo because most of the time we're on the same team. Now he was on the other end and I'm on the other end. So please hit a pro if you're still listening and tell us your thoughts, guys. Would really tell us your thoughts. We'd really like to understand what you think about this. We had a blast. We enjoyed this. And Cape Town, if you haven't reserved your seat in Cape Town, please do send an RSVP to our email at property at nongworld,
Property.
property events at nongworld.co.za. And we're waiting to see you.
Thank
Can't
you,
wait.
thank you, thank you
Looking
for
forward to
having me.
that.
Thank you for having me. And if you have actually been watching through the whole week in terms of the 30-day challenge, man, this was really exciting because this actually pulled us out of our comfort zone. So if you have actually been watching through the whole 30 days, make sure that you put a double pro on the comment section.
And if you think Lebo answered the questions quite excellent, you can hit a triple pro just for him.
No what?
Signing out.